Welcome back. Good morning if you're just joining us here on NDTV. Prashanth Narayan is Vice President and Head PMS at ING Investment Management. Joins us right now. Prashanth, great having you with us. Good morning. Prashanth, this side. Let me start with your quick thoughts on what you're doing in the market over the past few odd days now. We've crossed the hurdle on 5,000. Lot new paper is coming in. Oil India has made its debut. Just a comprehensive snapshot. Are you comfortable with the market levels? Are you investing?
Yeah, I think we are at this level keeping a long-term perspective, very comfortable with the level of the market. In my view, market is sort of fairly valued as of now, and I think going forward, what's going to probably determine the trend and the move of the market, apart from the liquidity which is coming, is the strength in the earnings. Over the past few weeks, one of the significant things we've seen, at least we have seen in terms of the advanced tax numbers that have come out significantly better, and that is actually we have upped our estimates on the index earnings for the next year, and that probably is going to drive the market going forward. And with respect to fresh papers coming in, obviously this is probably the nature of the market, that as and when there is market starts to rally and risk aversion, there are always companies coming and issuing papers in the market. Oil India, of course, we all saw it before, also in terms of analysis, that the Oil India...
Prashanth, I'm sorry to interrupt. I'll just come back to... Prashanth, I'm sorry to have interrupted you earlier, but your comments on Oil India, whether you, as part of your PMS, would subscribe to that. Have you already, in fact, subscribed to it?
The thing is, the listing of Oil India has come at a discount to existing ONGC, which gives us an opportunity to be part of this exploration space at a discount pricing, which again a very big comfort. And also, as it was stated there, the Oil India is almost it has around 350 to 400 rupees a share of cash lying on their books, which is again a lot of comfort in terms of providing support and to the portfolio which we hold. So obviously, yes, Oil India is has been a good issue which has come out. Another important aspect in Oil India is actually the confidence which gives us in terms of the government PSUs coming out because of the disinvestment story which the government had come up with. And this is the first big one, and it has been a good success. And I probably think that going forward, again, disinvestment will continue to be more rampant given the success of Oil India too.
But Prashanth, this time around, do you believe that further IPOs are going to be priced better? There was a little bit of a concern on Oil India as well. People wanted it to be priced at the lower end of the band, unlike the 1,050 that it finally got listed at. In retrospect, do you believe that 1,050 was a fair deal for the offer? And for the other IPOs, NHPC, for example, had a very muted debut, and there have been concerns about the recent spate of listings in terms of pricing.
Yeah, see, the thing is, pricing, as well as another aspect which we also saw, is the lack of retail participation in these IPOs. Again, obviously, retail participation pushes the price up to the upper level of the band. Invariably, if it's non-retail and more institutional participation, many institutions do buy it for long-term perspectives, by hold on to the stock for longer periods rather than sell it off at listing. And so you've seen muted listings over the past in terms of other IPOs that has come in the market. And Oil India, to that extent, was listed at a discount to ONGC, and also, and then market has to bridge the arbitrage between Oil India and ONGC, and that's why we are seeing a sharp spike up on listing itself.
Prashanth, Manvi also joining in from the Delhi studio. You referred to the disinvestment story and the potential there. What else catches your fancy then in keeping with that theme, the disinvestment story? And where else would you be looking then as attractive investment options?
I think on the broad sense, of course, over the last 4-5 years, PSU as a sector has not done well at all in terms of their performance. And going forward, I think, given the disinvestment and the way the government was going to reduce their holdings in these PSU companies to raise money to bridge their fiscal deficit, and PSU as a broad sector is probably going to perform in line or better than market as such. There are specific companies, Rural Electrification Corporation, PEC. There are quite a few companies which are probably prime candidates for again further disinvestment from the government side, so that they don't lose control over these companies but still raise money. But then the attractiveness of disinvestment comes up more on companies like Oil India, wherein it's basically a fresh listing, an IPO. It's a true disinvestment rather than government just selling off stakes in their existing holding. So we'd see more opportunity from the PSU space, from the IPOs or new listings coming in rather than selling off stakes in existing companies which are already listed.
Prashanth, just a question not on the buy side but on the sell side. What have you sold recently? I want to know where have you booked profits or taken profits? I'm going to come to you on that, Prashanth, just a bit. But breaking news on your screen. I'm going to read that out. Air India maintenance engineers call off intended strike. Probably the first signal that the strike itself is being called off. So, but right now we just have news coming in that the maintenance staff, the ground staff, or the engineers are calling off the intended strike, which they were looking like they were going to join the pilots who have been striking for a couple of days now. Now news coming in that the maintenance and the engineers staff, 58 of them who were supposed to call in sick today, they're not going to do that. They're not going to be part of the strike. Probably a little bit of resolution in sight. We're going to go across to Manisha in a bit as well. She's been on top of that story there. Has been an ongoing story for the past couple of days. Prashanth, I was asking you, what have you sold recently? Where have you booked profits?
In our case, we have we've seldomly changed the way our portfolio is constructed. In terms of book profits or / underweights in sectors, we are pretty much underweight in financial services and consumption as such. However, in the past, let's say 4 or 5 months, our portfolio is not, in terms of the allocation to sectors and overweight, underweights, has not changed significantly at all. We still hold on to our broad theme of the market being Indian economy being driven by consumption, and hence overweight on consumption-driven stocks or consumption-driven sectors like autos, for example, or cement, so to speak. Financial services, yes, we have actually gone underweight in the last few months in that sector. We were anyway underweight in the beginning, but we have gone further underweight in financial services, and we've actually reduced all our weight in consumers, so to speak.
Prashanth, was Bharti a part of your portfolio earlier? Have you changed or done something with it, given the uncertainty around the deal?
No, Bharti is being part of the portfolio. We hold it, and we are actually market weight on Bharti. We have not changed anything much on that particular company.
All right, Prashanth, just hold your thought.
Prashanth, our apologies for constant interruptions. What with the Oil India listing and the Air India strike being called off, let me just get one final view from you. We're building up now to earnings season. Are the next few trading sessions going to be range bound, and are you approaching the next few trading sessions with trepidation? What stance are you taking until earnings season kicks off and provides further direction?
I think in next few trading sessions, we usually don't take too much of a short-term view on the market. I mean, however well we'd like to take it, but we invariably, it's not, for our fund house, we usually don't take short-term positions or view. So to speak, the next few trading sessions, I would presume that, market might be range bound, but obviously there is a factor of liquidity, given where the global markets are going to move. So apart with lack of any triggers from the Indian market itself until the earnings season starts, the next few sessions will probably be influenced more by how the global market moves and also movement of the currencies and the commodities globally.
Well, Prashanth, thanks very much for joining us today. And once again, apologies for the constant interruptions. It was good getting your views. Coming up on opening moves, we're going to be looking at the cement sector in greater detail. Is there a demand pickup visible? What will happen given the capacity additions that are in the pipeline? All of that in just a moment.